Gita, what a pleasure to see you in Beijing again.
Always a pleasure to join you, Tian.
One of the great news that you are sharing with all of us during this trip is IMF has readjusted the prediction for China's economic growth rate for this year, 5%, next year 4.5%. Tell us more about why this readjustment.
Two main reasons for that are, one, that growth in the first quarter of this year came in stronger than was expected, and that is affecting our growth estimate. The second is there are additional policy measures that were and have been announced since we did our last forecast, and that's being incorporated in. So we expect over this year and next year consumption in China to continue to recover, and that's going to be an important driver. Public investment we expect will remain strong, and that's going to be a driver too. But on the other hand, private investment we expect will remain weak because of the problems in the property sector.
You have been meeting with some of the key figures in China's financial sector, whether central bank or other important commercial banks. What are your takeaways from the debt issue, for example?
So we've been paying close attention to the developments in the property sector and also local government finances. And the authorities have taken important steps in trying to address both those issues. On the property sector, they've done multiple things, including, helping increase the demand for housing, but also to deal with this stock of completed housing, this inventory of completed housing, which is not getting sold, by providing financing to state-owned enterprises, for example, to help with buying that housing and converting it into more affordable housing for households. That is a measure that can help. In terms of local government financing, providing transfers to local governments to help them. So these are important steps that have to be taken. But that said, of course, we see that there is more that needs to be done. For example, when it comes to the property sector, the one area that still needs addressing are those pre-sold houses. We think that the central government can play a bigger role in helping complete those unfinished housing. That will be a good boost in terms of confidence for the households, and also it's a way to have non-viable developers exit the market.
One would assume that China is still depending wholly on exports and also the property sector. But it seems that China has been changing, particularly with the consumption still rise, even though it is not catching up yet with the GDP growth rate, but certainly it has been growing. So how do you see some of the misconceptions and the realities here regarding China's consumption?
So if you look at the facts, what we see is the main drivers of growth in China are going to come from the private demand, from domestic demand, right? Not from the external sector. I think sometimes people are maybe mixing up the fact that during COVID era, there was a big increase in exports from China, but that was because of a very specific shift in demand. People moved away from restaurants and services towards consuming goods, and China, being a big manufacturing base, was producing a lot of that. But now we're back to more normal times, and we expect to see China's growth coming from domestic demand, not from net exports.
Gita, recently you've been giving several public speeches about the trade and its importance still for the global economy. Recently we have seen trade restrictions and trade protectionism measures growing among economies. Tell us more about your comments on, for example, between the two largest economies, China and the United States, particularly regarding green technologies such as electronic vehicles and batteries.
So firstly, just to recognize that last year and the year before, we saw a very large increase in the number of trade restrictions countries have put in the world. So 2023, there were 3,000 new trade restrictions. If you compare that to 2019, and it was only 1,000. So 3 times more trade restrictions are being put in place. Now, there are many reasons behind it. It reflects countries' concerns about after the pandemic, and especially after Russia's invasion of Ukraine. Countries are concerned about national security reasons. They want to diversify. They want to bring some production home. They want to build resilience. So all of these factors have played a role. But in addition, there is growing concerns about also industrial policies in different countries. We're seeing many countries put that in place. So I think we should keep in mind that trade has been very beneficial for countries and helped, livelihoods of many people around the world. But at the same time, the trade system has not been flawless. It's not been perfect. It does require more work to modernize it. For example, through the framework of the WTO, having a clearer understanding of how to deal with countries who provide subsidies to their different sectors. How should a country respond to that? That we need more work to be done on. But the important thing is countries should work as part of this multilateral trading system. They should try to address any grievances that they have through this multilateral system, as opposed to going unilaterally. And this is the advice we've been giving all of our countries.
So how would IMF be able to, at this important stage, try to hold these economies together on both the financial sector and certainly on trade, contributing to growth?
So firstly, we are providing information, including, working with the WTO to recognize how many new subsidies are being put in place, how many trade restrictions are being put in place. We're doing analysis to show how costly it can be. At the same time, we are a convening body. We have 190 member countries, and we have regular discussions among them so that they hear each other and realize that, one has to be careful. The global trading system has helped many countries in the world. Yes, it needs fixing, and yes, it needs to address more concerns, but one has to do it carefully. On the financial side, again, it is very critical that countries work with each other and provide financial support to one another, right? And the IMF has played a very important role. So since the pandemic, we've dispersed around we've made loans of about $369 billion to about 97 countries, and a big number of those countries are low-income countries. It is our membership that's giving us the mandate to do this. So it is our 190 member countries who are sitting together at the table and saying, okay, we need to provide support to other countries. So this is a sign of cooperation. It's a sign of multilateralism. It's working. We're also just recently moving towards having a third chair on our executive board, which is a chair from Sub-Saharan Africa, a third chair for Sub-Saharan Africa, so that to increase their representation. We're working on how we can do more concessional lending to poor countries. So in that sense, there are many areas where cooperation continues to happen, and we have to continue down that path to, again, reflect the importance of multilateralism for the world.
IMF is supposed to be apolitical, but at the same time, you also noticed that trade among those economies that are geopolitically different or distant are doing much less than they used to. So how do you observe that trend?
So we follow the data very closely. We don't tell countries what to do on the political front, but we certainly evaluate the consequences of their actions.
Right.
That if you look at, especially after Russia's invasion of Ukraine, what we are seeing is that countries that are more geopolitically aligned, trade and foreign direct investments as both holding up better than trade or foreign direct investment across countries that are not geopolitically aligned. And that is a relatively recent pattern that we're seeing. But at the same time, what we also do document is that there are the so-called block of non-aligned countries, which are not in any of these geopolitical blocks. They are playing the role of connector countries. So we're seeing what we call extending global supply chains. It is not surprising in this world that we are in right now. Companies are looking at the political environment, they're looking at policies, and they are adjusting accordingly.
Do you expect, from IMF's perspective, this trend will exacerbate in the near future? What would that mean for the global economy? I know you have already some numbers recently published.
This is an important risk. We certainly are in an environment where there are lots of questions being raised about the rules-based trading system. There are much bigger concerns on national security, and they're playing a bigger role than they've done in the past. So I think we should all treat this as an important risk to the global economy. We've looked at multiple scenarios to see what the consequences can be. If it is a more contained scenario, then the effects on global GDP could be very small, less than 0.5% of GDP. But if it becomes very serious fragmentation or serious decoupling in the world, then in trade, for example, then that could damage the global economy by around 7% of GDP, which is the size of, the economy of Japan and Germany combined. So a lot depends upon how much of this kind of fragmentation we've seen. As of now, we're still in the early stages. We're not anywhere near serious decoupling or anything like that. But I don't think we should take it for granted that the world will not go even more in that direction. So we have to be careful, and we have to constantly encourage countries to work together.
We have seen earlier predictions of the global economy to slow down further, but recently we have seen more optimism about the global economy. Do you see it is addressing both the optimism, the North, so-called the global North, and the global South, even though I'm hesitating to use these two words, but the developing and the developed economies?
We should all recognize that the global economy did better than was feared. In an environment where you have all these numerous shocks and you have central banks raising interest rates by a lot, I mean, there was a concern that we would see a much bigger slowdown in the global economy, and that didn't happen. We have inflation coming down in many countries. It's come down by a lot over the last year. We expect it to continue to decline over this year, while at the same time, for many countries, their economies are holding up fairly well. So, the so-called soft landing scenario is a real one, and we do believe that for many countries that is going to be the outcome. But that said, there are divergences. Not all countries are doing as well. So all parts of the world will have to work in raising growth. That will require raising productivity. That is going to be critical. For raising productivity, growth is important, which is why it comes back then to the question of when you think of trade, trade usually is a good way to raise productivity growth, and therefore it's important to preserve the essential qualities of the trading system.
The Chinese economy, the size of it, according to GDP numbers, has become 2/3 of that of the United States compared to earlier one, 70%. When you look at the global economy from this perspective, how do you interpret these latest changes and phenomena?
This obviously comes a bit mechanically, which is if you take China's economy and you look at the exchange rate, given that the renminbi has depreciated over the last year relative to the US dollar, that mechanically is going to generate a smaller relative size. Similarly, if you look at the price level growth in China, it's much lower than the price level growth in the US. So that again also mechanically can generate these movements. I think it's important not to be hyper-focused on these numbers, because the exchange rates can move around and they can have an effect. What is true is all countries, and especially China, has to look into the medium term and focus on structural reforms that will then raise their growth rates in the medium term. Because medium-term growth rate for China is not very high, but the more that can be done in terms of raising productivity growth, especially to address the headwind that's coming from an aging population. I think that's going to be very important.
We have seen some of the central banks, unlike earlier predictions, have not necessarily cut interest rates, like Fed, European Central Bank, Bank of England, and etc. So how do you see the latest discussion related to this? How much do you see this is going to have an impact on our predictions of the global economy?
All central banks are being cautious about when to move in terms of having a rate cut, right? Because you need to feel confident that you are moving durably towards your inflation target. And the data that came in over the last few months for the US, for example, gives you some pause and says, well, maybe it's a little early to move right away, but we should wait and see how the data comes in. And that's what the US Fed has signaled, which is saying that, we can wait and see. We don't have to move prematurely. And it also helps that the economy is holding up. Yes, it is slowing some, and yes, the labor market is is not as tight as it used to be. But still, it's a pretty strong situation. So they can afford to wait and see how the data comes in. Europe, on the other hand, the ECB has signaled that they're more likely to move sooner than the Fed will. So, June, for example, is a date that they have put out as something that they would consider as a date to move. So we would expect, I think we should see divergences. We will see some central banks moving sooner than the Fed will. But that's a reflection of how they're assessing their individual economies, the strength of their economies, the likelihood of inflation coming back to target, and that's what they should do.
But there are concerns among some financial scholars, for example, that economies are continuing the policies that they have been maintaining, for example, about rates, then people would expect inflations to continue, and that is going to have much impact on the confidence people have for the future of the economy, certainly on the consumption habits as well. So while understanding different economies have their circumstances and their best policy choices, but globally, what might be the spirit that central banks should have?
Oh, so firstly, I guess one of the central banks that has the most global effect is the US Fed. The US Fed is reacting to the fact that the US economy remains relatively strong, even though it's slowing, it is still strong. That is positive for the world. The timing of when to cut interest rates, it should be in line with when they expect inflation to come down durably. Because I think what is very important for the world is that the US Fed is able to bring inflation back down to target. I think it would be a bigger problem for the world if that was not the case. So, I do think that there is a positive spillover coming from aggregate higher demand in the US. There is, yes, the fact that higher interest rates for longer makes borrowing costs higher around the world, but it's still necessary policy for the Fed to make sure inflation comes back to target.
In the global economy, a lot of factors are coming in, especially from new technologies. Artificial intelligence is one of those. Certainly, there are some enormous development in that field. I know you have been, over the past year, looking closely into the new technologies. And how much do you see it is really having an impact?
I still see lots of enthusiasm around AI. In the US, for sure, there is tremendous amount of enthusiasm. It is this new so-called, general purpose technology that has the potential to affect multiple fields. I think over time, there is also a recognition that while there are many positives that can come from AI, including raising productivity growth, that could be very nice, that would be very helpful. But on the other hand, there are risks associated with it in terms of, for example, what are the implications for jobs, for humans, and what could be the risk? I think it is very important to track how AI is being adopted in the economy, look at the implications for labor markets, make sure that your fiscal policies, your tax systems are all consistent with this development of AI. We may need stronger social safety nets in an environment where you might see much more disruptive job losses. This is the time to prepare for it. In addition to all the concerns about privacy and ethics and security issues, I think there are very real economic and financial concerns that one should keep in mind. You absolutely want to make sure that you are getting the positive effects of AI, but while managing the risks.
Having said that, though, how is IMF taking advantage of artificial intelligence research, for example, gathering data and also coming up with the most advanced and most efficient analysis?
So, firstly, we have been using machine learning for a while now already in terms of helping with forecasting, all the different forecasting work that we do. So we already have relied a lot on machine learning. Now, of course, we have the newer forms of AI. We've actually created our own in-house, version of ChatGPT for the IMF. So we're using the commercial version that exists, but we have adapted it to the IMF and created a new kind of GPT, which is for us, that we use. I play with it all the time. I find it quite impressive. And we're also trying to see how, in which ways we can get AI to help with some of the routine tasks that people may not enjoy doing on your job, and so help you with that, so that we can free up human thinking for much more creative and imaginative work.
So how do you compare notes with your counterparts? How do you check the watch to stay on top of the latest news and information so that you can provide the best analysis to those needed?
I think it's very simple. I work for one of the best institutions in this area. The International Monetary Fund, it has a phenomenal group of economists and who work both in the financial sector and all other macro spaces and pay very close attention to developments around the world. And this is what we were created to do. It is the core, one of the core activities of the IMF when we were created was to do surveillance. And it's why we have teams that are deeply engaged at the granular level with countries, and then they aggregate that information up, and so we can perform all these kinds of surveillance. I'm here in China also as part of that surveillance mandate. The Article 4 is an example of that.
I see you travel very diligently.
Both,
yeah. For example, our several interviews took during the time when you are traveling to China. So how important it is to feel firsthand what is going on rather than just through reports and hearsay, theresay from an economist's perspective.
It's very helpful when you travel to a country and you meet with the authorities, the people who are making the decisions, to have a much clearer understanding of how they're thinking about the particular opportunities and challenges in their country and how they're working, to address those issues. So I find this extremely helpful when I meet with the authorities in China to get a sense of how they are, with their policy issues, their policy plans. That is extremely helpful. The second aspect, of course, is there's a big part of diplomacy to this. I think meeting people face to face is much nicer than meeting somebody on a screen, and therefore showing up in person makes a big difference.
Gita, thank you so much for sharing your time. Really appreciate it.
Thank you, Tian. Always a pleasure.